Good afternoon. George Cavaligos for HFT Bonds. You guys saw the video yesterday, I hope, and the email, or not the email, but the comments in the chat room for my overnight game plan was to look for the C equals A bounce. I think I posted the levels, 133.22 plus in the 10-year, and 148.30. I'm sorry, 149.30 in the bonds, maybe. I know the 10-year level. You'll understand why in a moment. Well, about 9 o'clock last night, I'm looking at the 10-year. It's trading 21.5, 22. It's looking pretty well bid. So I'm like, all right, C equals A at 22 plus. Let's put an offer in. Decent risk reward. Stops above the previous night's highs at 26. I leave my MIT offer at 22 plus. The market looked pretty well bid at the time. It was trading, 22s nicely. Go to bed. Wake up this morning. The high is still 22. I'm unable on my 22 plus MIT, and the market's trading 14. Frustration. We talked about it earlier, I think this week or late last week, about getting too cute, especially how the market tends to, in bear moves, fall short of exact resistance levels or exact targets, and in bull moves of moving higher, not going down to support levels exactly. I think the predatory algorithms have those levels. They've reverse engineered all the technical analysis books, and they just sit and wait either in front of or behind those levels, I think. Whatever. I don't want to be paranoid, but it didn't get to my level, and I got frustrated. I walked out of the house. I got to the office. The market had traded 13 in the 10-year, which was kind of a C equals A target on the downside. And I thought, okay, maybe that's, C wave. We'll look for a little bit of a bounce now. Well, the pit opened up, and the dealers just hammered the market. I'm not sure, but I don't think dealers are active in the overnight session that much, or in the early evening or early morning hours before the pit sessions are open. As soon as the pit session opened, the dealers just walloped the market. We went all the way down, I think, 133.09 plus in the 10-year, 149.01 initially in the bonds, which is an important support level. And then we bounced a little bit, but not much. I'm still frustrated and thinking about the trade from last night and how I missed that and how I need to correct that rather than looking forward at the next trade. And I've been struggling with this all day. You guys that have followed us for a long time, you know that I've only been a full-time trader now for less than a year. When I was a broker before, you were able to pick your spots at times when you were working for the companies that would actually let you trade. And you'd be able to wait and not be a full-time trader. You didn't have to worry about that kind of stuff. You'd be more concerned about taking care of your customers, which is proper. And then when those great opportunities would show up, oh my God, 133.22 plus, perfect C equals A, put your short on, work, great, it didn't work, you got stepped out, but you had the opportunity to wait for those opportunities more than as a full-time trader. As a full-time trader, you have to be involved on a minute-to-minute basis, on a day-to-day basis, watching the market and looking for the next move. Now, obviously, we all have to go back and look at our mistakes so we can correct those mistakes, but there's a time and a place for that. And while the markets are open and you're actively involved is not the time and the place. It messed me up quite a bit today. The market broke. I got down to the 133.09 plus level, bounced around between there and I think 13 plus a couple times, and then I thought what I was going to be looking for was a bounce out of there. I tried to get long. I got long at 11 plus. I think the market traded up to 13 plus on the Bonner comments about lack of progress on the fiscal cliff, which I think we're getting immune to because we really didn't rally that much. And then the market came right back off and went and retested the lows again. And then it just sat there right near the lows all afternoon until just a little while ago the equities started selling off. We rallied up to 14 plus, which is close to that 15 plus level that I'd highlighted earlier, but again I didn't pull the trigger and the market came back off. I think we're making a little B wave now. We're coming off a little bit. Looks like we're trading 10 years right around 10 plus. The bonds went up to 07. They're coming back down to even 01 right now. I think this is a little B wave. I'm looking for a C wave bounce up. I highlighted in the chat room the 133.18 plus level in the 10 year and the 149.14 to 16 area in the bonds. I think we could see that tonight, you know, barring any surprises early this evening. And again, I'm going to try and put a small short on up there, looking for the market to sell off into tomorrow morning's 10 year. The timing is different tomorrow because of the Fed meeting. There's no POMO tomorrow, no Fed activity in terms of buying and selling notes and bonds. But at 10:30 Chicago time is the deadline for the 10-year note auction bids. 11:30 is the Fed announcement where hopefully this QE, I've been calling it QE4, whatever program they're going to institute that will replace the Operation Twist program. Personally, I think they should just let it go. They're already doing QE with the mortgages to the tune of, what, $40 billion a month? That's a lot of money they're printing. Now they're talking about doubling that. Why? Why? I don't get it. They're not going to listen to me. Nobody else is really causing a big uproar about it either. I think that, you know, they're flying below the radar right now maybe. I don't know, but there will be ultimate consequences from this program at some point down the road. You know, we don't know when. How long does it take of printing money, you know, to the tune of $45 billion a month or $85 billion a month? What difference does that make, right? I think it will at some point down the road. I just don't know when that, you know, that point is. None of us do. Just got to be ready for it when it happens. I think if they come with the $45 billion in new buying, that's kind of what we expect. I think the market will initially rally a little bit and then come off. Hopefully by that time, if my shorts are on tonight, I'll be covering before the auction tomorrow morning to be flat for this Fed announcement. This is a big one. I get this sense that there's a lot of complacency in the market about it right now, and that worries me a lot. What I might do tomorrow is the stop limit situation where you're in a range. You look and put stops above, to buy the market above the range and stops below the support to sell the market with a limit. So I'll say if I think the market's going to break the 07 plus to 09 plus level in the 10 year, and I put a 06 plus, let's say an 07 stop with a tick and a half limit on it, might get filled. The guys in the room with me last unemployment number did not get filled in a lot of markets on stop limits that were looking for the breakout move. It's a risk you take, but it's also a good way to trade these big events like FOMC meetings, non-farm payroll data. We'll see if the boss gives me the leeway to play tomorrow. What else? A lot going on. All right, I think that's it. I'm going to go home and think a little bit. 4 o'clock this afternoon, great webinar. Fred Meisner, fantastic technician with Fari on the website. It's free. Go jump on it. It'll be great to see. He's going to talk about all the current markets and where he sees things at this point. And I got to get out of here so I can go home and see the webinar. Have a great night.